And good evening. This is the Elliott Wave update for the NASDAQ 100 for Thursday, December 30th, 2021. There's not much to be adding to my current analysis here for the NASDAQ. The market continues to work through what I am still considering a minute fourth wave correction, albeit now more complex. So as I've seen now in the ABC, it seems to be forming a double ABC corrective pattern, and this being A, B, C, and then we get the X wave, and then we get another A, a B, and now we're into that C wave. So while this is going on, it is providing some decent trading. It was kind of slow and very herky-jerky type moves until that last hour. And during that last hour, we just basically went down. And we went down over 100 points within an hour. So definitely some decent moves down and easy to catch and just hang on to. So again, if you were trading all day, then you more than likely had a very profitable day. For tomorrow, it does appear that we're going to still continue to have some downside here. And that would include making a break below 16,387. So where do we have that support coming in? We do have some support, first of all, at that previous low, 16,387, but then we have 16,327, and that was resistance on the way up and now becomes support on the way back down. And then we have the hourly 200 moving average at 16,304. And then we have the Fibonacci retracements at 16,254. And that retracement is the most common for a fourth wave, the most common retracement. And that's coming in at 16,254. So I've always left that in play, always left it as a possibility. Now, tomorrow, Friday, last trading day of the year, last expiration cycle of the year. So a lot can happen. Now, in my mind, I've been thinking, well, they bought it pretty strongly coming up to Christmas. And then right after, they continued to buy it. And that just leads me to believe that anything can happen tomorrow. Now, since I'm looking for an initial decline, doesn't have to go very far, but I think that we're still going to see some position squaring, et cetera, to the sell side. So we might see the initially coming in as sellers. That then may be replaced by buyers. Now, today's volumes were very light. The S&P mini contract, which normally trades over 1 million contracts, even on a slow day, came in less than 1 million, came in just over 800,000. The NASDAQ, which normally within its mini contract trades between 500,000 and 600,000 a day, came in less than 300,000 today. So volumes were light. So when the selling got heavy, it just dropped because there was nobody there to really kind of pick up the slack in terms of picking up any long-term positions. That may continue for tomorrow. In fact, it may get exacerbated by tomorrow. And therefore, we could see some pickup in volatility and how quickly prices will drop and rally. Now, stay on your toes, because that also provides a tremendous amount of opportunity to make some seriously good money trading the futures. So for tomorrow, we have our support levels coming down. When the market turns up, of course, we're going to have those same levels. If it broke, those will now provide resistance on the way back up. But I would be expecting the market to, and once this is complete, and the initial phase of that minute wave 5, to complete the minor wave 5, I think it should just really start to pick up and go. So wherever we're down, I think we'll turn around and come right back up with the same amount of speed and break back above these levels, start to break back above. If we break below the 200, get back above it, of course, break the 50, break the 20, and start heading up. Now, the highest we've gotten out of this sequence is 16,567. That's going to provide a level. That needs to be broken. 16,586 needs to be broken. This current high at 16,659 needs to be broken. The all-time high at 16,767, 68 needs to be broken. Now, will that happen tomorrow? I have no idea, but I would not place a strong bet that it will. Because there's a lot of movement intraday, and that would be a lot of volatility, and a lot of volume would have to come in to move it in those types of extremes. So what it's beginning to look like to me is that we may end the year possibly on a good note, but maybe lower. And then start the new year with new highs. So instead of finishing the year with new highs and then begin the next year with, okay, clean slate, let's just start selling, I think we make it the opposite, that we start the new year continuing to move higher and everything's glorious and grand, and then boom, it'll suddenly finish and it'll be done, and then we're off to the races on our next corrective phase, which would be on a very much larger scale. So again, as I've been saying all along, as we buckle back and forth between these rallies and declines, giving us false ebbs and starts in both directions, that the ultimate completion point will still be followed by a larger, longer-term corrective phase. So that's still out there. That's still waiting to begin. And if it gets pushed off into 2022, so be it. In any case, trade smart, trade using the moving averages. They really do guide entry and exits. They help you to stay in a trade if it's really moving in your direction along with the moving averages. It's golden. Use the Fibonacci, use the Elliott. Have a great trading day tomorrow. Have a very safe and happy new year. And while the Asian and European markets are going to be closed on Monday, the US is open. So I will make an update on Sunday in anticipation for Monday, January 3rd's trading. Have a great weekend, everybody.